After making a profit every day last week that I traded, I had to sit back and ask myself, why is it that 90% of the traders in this game fail? What is the reason? And I'm gonna tell y'all the reason. Most people forgot about the basics. They make things complicated, as if complicating things mean you're making money. They think trading is supposed to be complicated because everybody says complicated. It's not easy, but it's not as complicated as people make it, you dig? So in this video, we're gonna talk about why people struggle. Most traders are struggling because they don't believe in simplicity. I'm a man of simplicity. Simplicity make me a lot of money in this trading game. And the way you keep it simple is by going back to the basics. So that's what we're gonna do. We're gonna go back to the basics. I think people forgot about that. So the first thing we're gonna do is go back to the basics and talk about market structure. What is market structure? Market structure tells you who's in control, either the buyers or the sellers. When the bulls are in control, the bulls represent the buyers. That means the market is going up. It's in a bullish trend. And the bears represent the sellers. That means the market is going down and it's in a bearish trend. So you have a bullish trend and a bearish trend. The bulls represent the buyers, the bears represent the sellers. You dig? Now, when the market is going up, the buyers are dominating. So we are in a what? A bullish trend. In the bullish trend, you see higher highs and higher lows. The market created a higher high, and it created a higher low. Then it created a higher high and a higher low. This is a higher high because this high is higher than the previous high. This is a higher low because this low is higher than the previous low. Then it created a higher high and a higher low. A higher high and a higher low. The market is on the uptrend. When you're trying to find a main trend, you go to a higher time frame, like the 4-hour, the daily, or the weekly chart. And you look at the swing moves, the peak moves. You should be able to see higher highs and higher lows as soon as you look at the chart. Okay? Now let's talk about a basic pattern. This is market structure. But a basic pattern, point A to point B, then the market consolidate. Then point C to point D is called the A, B equals C, D pattern. This is an AB equals CD pattern. Point A to point B, that's an impulsive move. That's a strong move to the top. Then we have a pullback. Then we have a C to D. That's what you see right here. Point A to point B. Then we have a pullback. Then we have C to D, impulsive move. Now right here was a high, right? The market broke this high and created a what? A new high. So if it broke this high, this break become a what? BOS. What is that? A break of structure. Once again, point A to point B, market retrace, and point C to D, impulsive move. This is the high. The market broke through this high and created another high. Once again, we have a BOS, a break of structure. A break of structure is a trend continuation. That's all you have to remember. A BOS is a trend continuation. This is how you understand the framework of market structure. Okay? Once again, we have our high, point C to D break the high. And they form a BOS. Okay? C to D will always form a BOS if it break the high and create a new high. Now if I'm on the daily chart, all this right here is the same pattern, same basic pattern, the AB equals CD. All these candles perform the same structure on a smaller time frame. But we is on the day chart, if you drop down to the 1 hour, the 15 minute, the 5 minute, you'll see the same AB equals CD pattern. Even on the retracement, on the smaller time frame, you'll see that same basic pattern. Even up here, you'll see the same basic pattern. The market is fractal. That means what happened on a higher time frame can happen on a smaller time frame, on a smaller scale. You dig? Now in this image, We're looking at lower highs and lower lows. Lower highs and lower lows. Dig? That means we are in a bearish trend. The sellers got control. We got point A to point B. We got that retracement or that pullback. Point C to point D. This low right here was broken. So what is that? That's a break structure, BOS, a break of structure. Now I could have made a lower high right here. Said this was a what? It's not a lower low, this would be a higher low. Yeah, I said it's a higher low. Because this low is higher than the previous low. Okay. We got a pullback. We got a higher low. Even though we have a higher low, the market is still considered a downward move. Because this high didn't break the previous high. You feel what I'm saying? Okay. So now we have a higher high, pullback, pullback, and we have a lower high, and we have a lower low, break of structure. This right here wouldn't be a lower low, it'll be an equal low, equal to this low right here. So you see how the market throws a curveball. Sometimes it'll be off a little bit. But I'm gonna show you how to spot a reversal. Right now I'm just showing y'all the BOS structure, you dig? The BOS structure is normally when the C and D and they break the low on the downtrend or break the high on the uptrend. That's the BOS, you dig? Now this is a screenshot from my mentorship program. The market is ranging. That means equal highs and equal lows. Neither the bears nor the bulls have control. When you're in a ranging market, what you want to do is chill, be patient, and wait for the breakout. Wait for the breakout. It can break to the top, or it can break to the bottom. We don't know. That's why we have to be patient. Let me change the color right quick. Okay, now the top, where it get rejected at, that's known as resistance level. Bottom is known as support. Think of resistance and support as price levels on the chart that the market react to. It can get rejected or it can simply break through. It doesn't guarantee that it's gonna reject every single time. This is resistance. Think of resistance as the ceiling. It's above the market. And right here is support. Think of support as the floor. When you bounce the ball on the floor, what it do? It go up. Okay? Now, when the market break through support, retest, and this level hold, it's probably gonna go down. If this support and the market break through, support turn into resistance. Why? Because resistance is the ceiling. Remember what I said, resistance is the ceiling. It's when the market is below a level, that's resistance. What it do when it come back to the ceiling? It hit its head and bounce down. It got rejected. When you look at that resistance, when the market break through resistance, this is no longer resistance. It turned into support. When you bounce the ball on the floor, what it do? It hold up, then it go up. This level held. Levels are not gonna always hold. Let me explain something. Nothing in a trading game is guaranteed. We take trades based on high probability. What is the best case scenario? And what is the worst case scenario? You have to weigh your options, you dig? And manage your money. So far, I showed y'all when the bulls are in control. I showed y'all when the bears are in control. Then I showed y'all when nobody is in control. That's when the market is raining or the market is choppy. Now let's talk about a trend reversal. Because the BOS is a trend continuation. Now let's talk about a possible reversal. Now if you look at this chart, this is market structure. Point A to point B. You got a retracement. Point C to D. Break this high, that's a break of structure, a trend continuation. Another one, point A to point B, the pullback, point C to point D, and break this high, a break of structure, and so on and so on. Look when it get to the last higher low. This is a higher low, this is a higher low, this is a higher low, this is a higher low. So it's on an uptrend. This is the last higher low. What do I mean by this is the last higher low? The market created another high. Then what did it do? It created a lower low. It's a sign of a change of character. Change of character means possible reversal. Nothing is guaranteed. When you see this, pay attention. Because after this happened, we must get a lower high. We got a lower high, change of character. The market is reversing. And what it do? It go down. This is it was point A to point B. We got our retracement. Now this is point C to point D. What it do? It break the previous low. It created a new low. So that's a break of structure. That's the difference between break of structure and a change of character. And as you can see, the market create lower highs and lower lows in a reversal. If you can figure out what I just taught you, you will understand market structure and always know who's in control. And once you know who's in control, as a new trader, you want to trade with the trend. Can you counter trend trade? Yes, you can. Many experienced traders counter trend trade, but your highest probability is trading with the trend. You dig? Now I'm on TradingView. TradingView, in my opinion, is the best charting software in the game. And many people would agree with me. Everybody use TradingView. I don't care what broker I use TradingView to monitor the market, you dig? So with that being said, I'm gonna grab one of my favorite tools called the Fibonacci tool. Now look at this. So the market was coming up. This is my low. I'm gonna swing from my low to the most recent high and wait for the pullback. When the market pull back, it's normally pulling back to the 50% level, which is right here, or the 61.8 level, which is right here. This is called the golden zone. 61.8 is called the golden level, but this is the golden zone. These are the two most important levels on this tool. Now there are other levels, but I don't use those levels. I delete them, and let me show you how I delete them. Like if you look at my settings, you take a screenshot and set it up just like mine. I uncheck 38.2 and everything else. I just have my 0, my 61.8, my 1, and my 50%. I turn my 61.8 yellow and my 50% yellow. I could have a background on there, but I keep that small. No reversal. Then I have my price and my levels, my value. I have my label to the right side or the middle, the text to the center or the middle, and the screenshot that, have it like mine. Dig? So now let's talk about this tool. This is a powerful tool. If you ever watched the video about nature, about life, it's called the Fibonacci on numbers. Before I even got into trading, I got this friend. He's very smart. He came out of prison. And I was sitting at his house one day and we were just watching random stuff on YouTube because he designed computers. He's a very smart dude. He was telling me about Fibonacci numbers, and I realized that these numbers are in nature. It's everywhere. It's in our hands. It's in space. Fibonacci numbers are everywhere. You dig? So when I saw this Fibonacci tool and found out how it worked, I was like, they saying the same thing the video said that I watched years ago. So I fell in love with this tool quick because Fibonacci numbers are always amazing to me, you dig? So I want to show y'all how to use this tool properly. Now I'm gonna play this short video for y'all that's gonna explain Fibonacci numbers. When I saw this video, it blew my mind. Not this particular video, it was another video. I do not know why or how my homie got me to watch this video. But like I said, he's a smart guy. He always on some weird stuff. And for some reason, we was talking about Fibonacci numbers. And he showed me this video and it blew my mind. And when I got into trading and saw this tool, I brought it to his attention. That's how he got into trading. Check it out.
The sequence begins with the numbers 1, 1, 2, 3, 5, 8, 13, 21, 34, and continues indefinitely. Each number is obtained by adding the last two digits together. If we were to take a perfect or golden rectangle, break it down into smaller squares based on Fibonacci's sequence, and divide each with an arc, the patterns begin to take shape. We begin to see Fibonacci's spiral. The spiral in and of itself is insignificant. Its importance is revealed in where we find it. Take, for example, the sunflower. The display of its florets are in perfect spirals of 55, 34, and 21, the sequence of Fibonacci. The fruitlets of the pineapple create this same spiral based on the sequence. The pine cone does the same. As currents move through the ocean and the tide rolls onto the shore, the waves that bring in the tide curve into a spiral that can be mathematically diagrammed onto a plot at the points 1, 1, 2, 3, 5, 8, 13, 21, 34, and 55. Buds on trees, sand dollars, starfish, petals on flowers, and especially the nautilus shell are formed with this exact same blueprint. With each segment of growth, the nautilus adds to itself one more value on Fibonacci's scale. This blueprint can be seen around us on a small scale every day, but the greatest example of all is directly above our heads. At an average of 100,000 light years across, even the spiral of the galaxies above us are formed with the exact design that the tiny shell is formed. This sequence, or blueprint, appears to be the trademark of a designer.
Now, the way you use this tool, you draw from point A to point B. You want to catch that retracement. After that retracement, you have point C to D. So if I look at this chart right now, I'll go from point A to point B, right here. The most recent low to the most recent high. So right here from point A to point B. Look where the market retraced to, 61.8. You can hop in the trade at this level and ride it up. It's not everywhere, but it happens more often than not. And if you learn how to use this Fibonacci tool, you can make some money, some good money. It's amazing that this tool works exactly like the videos explained years ago, years before I got into trading. These numbers are very powerful. The 6.8 is the golden ratio. From the 50% level to the 618 level is the golden zone. That's what I call it. I can show you this multiple times. I just try to find another AB level. Make this up a little bit. Look at that. Hit that zone. Perfect. Could have hopped in this trade and made some money. Look at where it went at, way up here. There are people that trade just with the Fibonacci. I use the Fibonacci from time to time, but I don't use it as much as I should, but it definitely made me some money, is what I'm saying. So we can look at it right here too. Point A, point B, look at that, perfect. So yeah, using the Fibonacci tool definitely could put money in your pocket, you dig? That's on the uptrend. If we on the downtrend, you'll draw it from the opposite direction, you dig? See if I can find the downtrend. Let's go with this right here. You'll go from the most recent high, most recent low. Look at that. It's 61.8, it went down. When you're on the downtrend, you go from the swing high. You start at the high to the swing low, the most recent low, point A to point B. When you're in the uptrend, you draw from the most recent low to the recent high. You dig? This is called the Fibonacci tool. You can come right here and grab the Fibonacci retracement tool right here. Let's see what this is. Look at that. Pinpoint. Point A to point B, we got the retracement. C to D. Look how far it dropped. Market just dropped. You could have made a lot of money with this trade right here. So yeah, man, practice using the Fibonacci with market structure, understanding retracement, understanding point A and point B, understanding point C and point D. Yeah, you'll really start making some money, but it's gonna take time. It's not easy like I'm making it to be, but it's definitely something you can do that'll make you some money. So let me go right here. Point A to point B. Look at that. Perfect. This tool is powerful, people. It's very powerful. So I'm gonna end this video right there. I think this was some advanced information for people that want to go back to the basics and understand market structure. Everything you're learning about trading revolves around this, market structure. This is the framework of the market. I don't care what type of strategy you have, it all come back to market structure. You dig? It's your boy Leo. If this video was helpful, hit that like button. Make sure you hit that subscribe button, hit that bell notification. You dig? And I will be back dropping more sauce for y'all. You heard? Peace.